Hi, good evening, everyone. I'm Adrian, your host tonight. I'll be moderating the session tonight. And tonight we have Mr. Tong from NetLink and Miss Diane Chan. Mr. Tong is a CEO of NetLink, while Miss Diane Chan is a CFO of NetLink. So, a bit of a quick introduction. By the way, what I'm sharing here is a disclaimer. Those that have been following me for a while, you'll know what I'm going to say. Print this disclaimer out, hang it on your toilet wall or even your main door so you can read it. For those that have not followed us, please, I need your favor from you guys. Do take out a phone, scan this cute little box here, and you will have most updates and most importantly, how to stay guided in the market, especially in this volatile time here. So what does NetLink does? So NetLink actually designs, builds, and operates the passive fiber network infrastructure of in Singapore. And it is an initiative led by Singapore government, and it aims to enhance the competitiveness and economy of scale of things in the context of one good thing about Singapore that versus us is they are adamant to make sure every household has a fiber optic because more high rise, right? But for our site here, it's a bit different. So yeah, so that's NetLink. And interestingly, it's a business trust. A lot of actually, I've been asking myself that question: what is a business trust? A business trust is basically almost like a REIT, but it's not a REIT. What is the difference? The major difference is uh, business trust, they share the same owner and the manager of the trust. It's a single manager. But from the REIT perspective, it is not. You need an external manager, not you cannot be the asset owner. So that without further ado, I shall stop sharing. And yeah, Annabelle, you can take the floor in sharing the slides. And let's invite Mr. Tong tonight to share with us on what's NetLink all about. And even myself is excited about it. Thank you, Mr. Tong.
Thank you, Adrian. Thank you very much. Uh, Good evening to everyone on the call. We are very happy to be here. I'm Yu Heng, the CEO of NetLink. Together with me is Diane, my CFO, and also two of my colleagues, Victor as well as Annabelle. Diane and myself will go through this presentation, not a very long one, about 10 to 15 minutes, and thereafter, we'll be happy to take any questions that you may have. So I'll go straight into the presentation. Let's start with the next page. This is a disclaimer also for your information, and then into the business slide. Okay, I like to use this slide to talk about our business. In fact, you can understand our business very well by just looking at this slide. So it's a very interesting and important slide. What do we do at NetLink in Singapore? NetLink is a fiber owner and operator in Singapore. We design and build the entire fiber network island-wide. So we have 10 central offices across the island in Singapore. You can see in this slide, right in the middle, 10 central offices. Each of these building, from each of these building, we would have underground ducts to all the surrounding buildings. And within those ducts, which are PVC pipes buried underground, there will be fibers, and the fibers will reach into the buildings. And for the residential sector, not only into the buildings, but actually into each home. So in total, you will see a number 1.524 million. In total, today, we have 1.524 million households in Singapore using our fiber for broadband internet access. Most of them are using it at about 1 gigabits per second plan. So we provide all the fibers into the homes today. And 1.524 million is about close to 100% of all the homes in Singapore. Obviously, there are still some homes in Singapore that have decided not to use fiber or not to have any kind of broadband. But if they are using broadband, then they will be using our fiber for broadband. And NetLink is only a fiber provider. NetLink does not provide internet package, routers, optical terminals and things like that. We only provide the fibers. And we offer this fiber to other telcos like Singtel, StarHub, M1. They will be using our fiber to provide a service to the residential end user. Moving to the right, you'll see a number 53,000. These are non-residential end user. This could be banks, offices, could be a shops. So all these are non-residential end user. We have 53,000. And further down, you'll see 2,900. These are fiber connection to outdoor location. NBN connection means non-building address point, no postal code, meaning to a lamppost, to a traffic light, to a billboard, to a bus stop. And then lower left, you will see 3,600. These are other type of fiber connections. This could be from building to building, central office to central office, and so on. So all these numbers are important, and I will talk about these connection numbers a bit later on, because we derive our revenue from this providing these connections. Over to the next page. We get asked a lot about our business, NetLink business. And I would like to, at this point, give you a bit of the history, why we come into being, right? The Singapore government decided around 2007, 2008 that, we need a new network to replace the copper network island-wide. And this network, fiber network, must serve every household in Singapore and connect to every single building, whether they are residential and non-residential. So they decided that they would invite participants in the telco space then to submit and participate in a tender. So to cut the long story short, NetLink won the tender, and then we were given some subsidy, 752 million, and we were also given certain timeline to finish up the wiring. So by 2013, actually, we finish up wiring to all the existing buildings as well as a household in Singapore. So Singapore is one of very few countries in the world that have 100% fiber connection to all the homes, right? So the government has achieved that objective. So, but our role is strictly just providing fibers. What the government and regulator would also like to see is that there's competition in the offering of broadband packages. So today, if you come into Singapore, you will see advertisement for StarHub broadband, Singtel broadband, M1 broadband, and others, or you can check on the internet. So they are able to offer and compete with one another, but they will use our fiber to provide that kind of connection to the residential space. Now I will address a few key questions that investors like yourself often ask us. I'll start from the left. Fiber is it's not only the preferred means of fixed broadband delivery. In Singapore today, it is the only means of fixed broadband delivery. What do I mean by that? In the past, any home in Singapore that want a fixed broadband, high-speed internet connection, they could get a modem, they could use copper wires, they could use cable also to get a broadband and so on. But in Singapore today, there's no more copper wire for broadband, there's no more cable for broadband, you only have fiber for broadband. So we are the only one providing fixed broadband using fiber. This is different from Malaysia. This is different from Australia, New Zealand, and other country, because usually they have a combination. They still have a combination. Say, for example, Australia, fixed broadband is delivered into the home via fiber, obviously, copper wire as well, combination of copper and fiber, half copper, half fiber. Also, there's such a situation, or wireless up to a point before they are connected to wire or satellite. The second point I want to make on this slide is high penetration rate. Because we are the only one providing all the fiber to the homes, we have a very high penetration rate. This also leads to very low prices for broadband in Singapore. So today, most of the broadband packages are about $35, $40 per month. Yeah, so, and you get 1 gigabits per second with the router thrown in, right? So it's, I would say, I'm not sure about Malaysia, but compared to a lot of countries that I have seen, the prices is pretty competitive. And I also want to make another point that the fiber is not only used for connecting to buildings and homes, but also used to connect to last mile wireless solution, connecting to sensors, cameras, and all that. So increasingly, we are seeing more of this. Another very important point is that fiber is scalable. What do I mean by scalable? Scalable is that Today, the fiber is used to carry 1 gigabits per second. The same fiber can use to carry higher transmission speed. Because we are often asked, hey, what happens if the technology changes, the equipment improve to a next generation, the second generation, third generation, or fourth generation? What happened to the fiber? The same fiber could be used. So it's highly scalable. Today, I mentioned that most homes in Singapore use 1 gigabits, but some are already starting to use 10 gigabits. Same fiber, no change. Only equipment change. Equipment changed by the telcos. The telco will have to change the equipment. But for us, it's the same fiber, no change, 10 gigabits. In fact, in about 3 years' time, almost everyone in Singapore will be able to subscribe to 10 gigabits per second, up to 10 gigabits per second. The next step in the technology is 50 or 100, depending on adoption. There's the standard is there, so we expect the same fiber to be used also. So fiber is designed to last a long time, and is also able to support newer technology. So we are not worried about obsolescence. I'll move on to the next page. Okay, here's a quick look at our Q1 first quarter FY25 result. First quarter is April to June this year. We announced our result only on the 2nd of August. So revenue dropped a little at 100, ended the quarter at 100.9 million. EBITDA also dropped a little, and compared to a year ago, ended the quarter at 73.4 million. My CFO will give you a bit more details later on, so I won't go through that. But importantly, if you look at the lower half of the slide, you will see net gearing 26.5%. I would say this is a very comfortable level of debt, very low level of debt. So we have very low level of debt, very strong balance sheet. The weighted debt, average debt maturity is 2.1 years. So we have no immediate refinancing this year or even next year. The major ones is going to happen in 2026, somewhere in the middle of 2026. So we are in a sweet spot. At that time, we expect interest rate to be a bit more lower, and I think it'll be a good time for us to refinance the bulk of our debt at that point in time. So market capitalization, about 3.2 billion. Over to the next page. Okay, here's a quick look at how our connection numbers have grown. You can see, starting on the left, residential, connection numbers have grown from 1.44 million to 1.524 million over the years. Non-residential has grown as well, non-building address point and segment. So fiber connections continue to grow, and we expect this trend to continue going forward. Of course, I would have to add here that the increase will be more moderated because most households are already connected, so we cannot expect huge increase, right? And we can touch on that if you have a question on that later on. Over to the next page. Okay, this is a very important slide, I must emphasize, because it helps us and help investors to understand how we make our money and where the revenue are coming from. I really talk about residential connection. Actually, the 1.5 million residential connection contribute 60% of our total revenue. And if you have been following us since IPO in 2017 until now, this number has always been around there, about 60% of our total revenue. Non-residential, about 8.4%, NBN about another type of connection, 4.7%. So all the connections added together give us about 75% of our total revenue. This is important because if 75% of our total revenue comes from connections, then the stability of our revenue depends on the connection numbers. Our expectation whether the connection number will increase or decrease. Our expectation is that it will increase. Because once people get connected, they don't disconnect. They will stay. Even if they switch from one operator, say for example, operator A to operator B, because they change their broadband plan, they still use the same fiber for residential. I will add here that for residential, we are the only one providing fiber to all the homes in Singapore. For non-residential and for NBN connections, there's competition, but it has always been the case. There's always competition because we are not the first entrant into the space. Because before we started in 2008, other players the traditional telcos, I would call Singtel, StarHub, traditional telcos, they are there. They have been providing fibers to commercial premises, offices, selected areas, and so on. So they remain, and they would compete to provide fibers to those locations. But moving on further to the right, on this chart, ducts and manhole service revenue is a long-term contracted revenue that we derive from the leasing of our duct space to Singtel. We bought all the ducts that we need from Singtel. That's how we started. We lay new fibers, but we bought all the ducts from Singtel so that we could lay fibers quickly. But we also lease out the space back to them. So these in turn generate 6.5% of the total revenue. We also lease out other space. That's the co-location revenue and central office revenue. These are leasing of rack space, leasing of central office space to other telcos. And then we have two other revenue, installation and ancillary project, 6.5 and 3.7%. These are revenue that we derive when we carry out work for other telcos or other government agencies. I give you one quick example. Say the train operator in Singapore or the train regulator, LTA, Line Transport Authority in Singapore, wish to build a new train station, MRT station. They will come to us first so that we could move any cable underground beneath the area that they wish to do construction, reroute those cables. So they will have to pay for the full project. So we also make a revenue and margin from doing such work for Land Transport Authority, for the Housing Board, for anyone that wish to, even for someone building let's say a new bungalow or new development somewhere. If there's cable underground, they will have to come to us first so that we can carry out the project. So this is recurring revenue, but it depends on the level of construction activity. So more construction activity means higher volume for us. But if you look at this chart from the left to the right, you will see that for this business model is a very resilient one, very low risk. Because we are very different from, say, a mobile operator, which face two main risks, I would say, like price and volume. Because price changes all the time because of competition. For us, no. The price is fixed for 5 years. I will talk about the review later on, but it's fixed for 5 years. In fact, just fixed starting from 1st April this year for the next 5 years. We have gone through a process with the regulator and agree on the fixed prices. So we are not affected by the pricing risk. We are also not affected by too much by the volume risk because we don't compete directly with everyone, especially in the residential sector. Over to the next page. Okay, a few key points here. Our key focus for this financial year obviously is to grow our connection, in particular embed and segment connection. Those outdoor locations, because we already covered all of the buildings, so we want to focus more on the outdoor connection. We'll continue to support small and medium enterprises in Singapore. These are enterprises that are quite small. This could be a one-man show, a single-man shops, laundry shop, or it could be a manufacturing concern of 100 people or so. But Singapore have about 300,000 SMEs, but many of them are not using fiber for their business. So we want to connect them. We are also enhancing our facility to support the upgrade to 10 gigabits per second. I talk about the move to provide 10 gigabits per second to all Singaporeans. All the telco have started to work on this, but it will take about 2 to 3 years. Our part in this upgrade is to improve the facility, provide more power, more cooling, so that the telcos can put in equipment, new equipment in our central office. So we are working on this. We are also building a new central office in the northern part of Singapore. This is to support future development in the northern part of Singapore, future housing development in the northern part of Singapore. So this is a long-term thing. But this construction is good for us because all the capex that we spend will earn a return for us. Our model is different from other telco in that capex incurred to support the fiber network, the regulator, IMDA in Singapore, will allow us to recover the investment over a period of time. It will be factored into the pricing to the consumer, right? So at the end of the day, whatever we spend on the network will be included into a formula that would that will be used to derive the pricing that should be charged to each consumer. And lastly, we are also very focused on sustainability initiatives. Like most corporate in Singapore, we want to make sure that we reach the target that we have set. We have set two targets. One is by 2030 to halve our emission from the baseline in 2022, and by 2050 to reach net zero. So we are serious about it and we are working towards it. Okay, next page. I think right now I will hand over to Diane, who will take you through the financials. Diane, please.
Thank you, Yu Heng. Good evening, everyone. It's good to meet you here tonight. Okay, I think on the screen, this is actually first quarter of FY25 unaudited results. Our financial year is March. So Q1 FY25 means April 2024 to June 2024. And the corresponding period is April 2023 to June 2023. Okay, so for one quarter, our revenue is 100.9 million and EBITDA is 73.4 million. The EBITDA margin is 72.7%. Okay, a few things I want to mention here. First, we have one quarter revenue of 100 million. Last year, FY24, the full year is about 411 million. So it means that 1 quarter times 4 is almost equal to 1 year of revenue. That means that our revenue actually from quarter to quarter is actually very stable, and actually we don't have much of we don't have any seasonality factors. So from quarter to quarter is actually very stable. Okay, that's one key point to take note. Second is that actually when we look at revenue, just now if you remember the chart that Yu Heng showed, we split into regulated asset revenue and non-regulated asset revenue. For the regulated asset revenue, it comprises about 85% of the total revenue. For this quarter, it remains very stable. And that is actually despite that the revised price for the key services has been revised from 1st April 2024 onwards. The revised price is effective from April 2024 for 5 years until 2029. And this price, I think the biggest, there are some slight reduction in certain key services. For example, for the residential services, it revised from 1380 to 1350 per user per month, and which is represents about 2.2% reduction. But nonetheless, despite the reduction, we are actually able to keep the regulated asset revenue very stable. Why so? That's because the downwards price impact has been mitigated with the continuous growth in the connection numbers. Okay. So just want you to take away this point that is stable, and the price impact, temporary price impact, is offset by the connection growth. Second is the non-regulated asset revenue, which I think make up about 15% of total revenue. For those revenue is a bit of volume driven. It fluctuates from period to period, and I think there's a slightly lower ancillary project revenue in Q1 FY25 by 3 million, and that's mainly because of fewer projects on the road. The reason is actually because I think for the last 2 years, FY24 and FY23, it's kind of a peak period for ancillary project revenues for us, because partly because there's quite a bit of backlogs that is actually accumulated from the COVID period, and I think we actually tried to clear most of these backlogs. So in 2023, 2024 were peak periods for the ancillary projects. So in 2025, this has been normalized. And also want to mention that for the ancillary project revenues, the margins are actually very stable despite a 3 million decline in the revenue itself. Okay, so EBITDA is a 2.4% reduction, 73.4 million. Again, EBITDA is very stable from quarter to quarter. The slight reduction in Q1 this year as compared to the previous corresponding quarter is because in the Q1 FY24, there is a one-off gain due to a disposal of assets that we recognize as non-operating income. So it's not the core business having an EBITDA reduction. What I want you to also to take away is that our EBITDA margin is 72.7%. I think this is a very strong margin, and actually since NetLink's IPO from 2017, we have been able to maintain a EBITDA margin of about 70% for all the years. Okay, so despite a reduction in the price, a slight revision in the price, and also cost has been escalated quite a bit in the past since 2022 or so, I think we are still able to actually optimize the operation and control the EBITDA margin above 70% level. Depreciation and amortization is accounting depreciation. Basically, it's a fixed asset that we have and over the useful life of the fixed asset. The biggest category of fixed asset is our network assets, which is the ducts and manholes and fibers that we lay across Singapore. So these assets are very long life. In average, it's about 25 to 35 years for these assets. So the depreciation amortization is kind of a straight line, slight increase if we compare from quarter to quarter because we continuously invest in our network assets. The next number, net finance cost, 4.5 million. This is the interest that we paid to the banks. I will talk a bit more of the numbers in the next page. So about 4.5 million in a quarter, less than 20 million of interest expense in the full year. Okay. Profit after tax we pay is like less attention to this because EBITDA is a key number that we focus. EBITDA is a number that we focus and make sure that it convert into cash flow and then be able to support distribution. Okay, maybe I can move on to the next page. Okay, so these are the key credit metrics and that you may want to understand. Gross debt 790 million. Okay, in the earlier slide we showed that actually our gearing is only 26.5%. Weighted average debt maturity period 2.1 years. What it means is that we don't have an immediate refinancing needs in the next 12 months. Okay, our next refinancing needs is in the later part of 2025. Okay, and I think with the interest rate environment soften from become more likely that it will soften from now on, it actually give us a very good opportunity. We have a very good runway, and I think to look for favorable refinancing and schemes to support our operation. Net debt to EBITDA 2.2 times. These are the key metrics that we follow. And also you look at the next one, EBITDA interest cover 13.8 times. So these are the key metrics, and you compare to other infrastructure peers, I think our numbers stands very strong. We have very good numbers if you compare to other utility peers. Okay, another one to highlight is that borrowing, we have actually the 790 million that we have on our balance sheet. 76% of this has been fixed at the fixed rate. And you look at the effective interest rate for one quarter is 2.69%. Last year, the same period is about the same, 2.75%. So why we can achieve such a, I think you probably will agree that up to now, the interest rate has been pretty high for the last two years or so. And we are still able to maintain an effective interest rate of about around 2.7%. That is really because we actually have a large proportion of borrowing has already hedged at a very favorable interest rate. Okay. On the right side, if you see the waterfall chart, that is our cash flow, a snapshot of cash flow. The blue bar, if you see 72 million, is one quarter of operating cash flow. So you remember the EBITDA number 73 million. It means that almost all the EBITDA we are able to convert into operating cash. Okay. The second column, 32.5, is the investment in a continuous investment in our capex. And because we are under a regulated asset model, every dollars of investment actually is good for us because we are able to recover this investment together with a rate return of 7% based on the regulatory framework. Okay. The last, the 79.2 million, the net cash used in financing activity, basically is the half year of distribution that we pay, 100 over million, net of 25 million of debts that we actually draw down, okay, in the quarter itself. So this is a snapshot of cash flow. Next page, please. Okay, distribution, come to distribution. A few key takeaway points here is that our distribution yield is quite, our distribution first is very stable. Since I think all the years, NetLink tried to grow our dividend in a very consistent and a sustainable manner. So even during the COVID years, etc., we are still able to grow our distribution. That's because our business model is very resilient and we are able to generate revenue and EBITDA consistently. Since IPO in 2017, NetLink in total has returned 1.3 billion of distributions to our unit holders, and without calling any equities. I think that makes us a bit different from many of the REITs, which pays distribution, but they at the same time, when they have a capex requirement, they cost equity. Okay. On the right side is the distribution yield. So I think 6.2%, that is computed based on a unit price of 85.5 cents as at the 28 March 2024. I think today our unit price is based on the last traded price today is 89.5 cents. That I think that brings our yield probably based on that is around 6% or slightly lower. And you compare ourselves to a 10 years Singapore government bond, the spread is around 3% of that. Okay, so distribution yield 6.2% based on a very low risk and stable business model. I thought that's not too bad. Next page, please. Okay, sustainability, just a snapshot. This is a big topic today, and I think for NetLink as an organization, we take sustainability seriously. We have commitments on the sustainability scope 1, scope 2 reduction, and we actually also look for initiative that incorporated into our business operations. On this slide is actually a report card where we use frameworks to guide us in identifying our material topics into 10 material topics into 3 different areas following certain sustainability framework. And then I think I don't want to go into the details on this, but if you have any question, you can always ask. Just want to say that maybe 2 points. One, to begin with, NetLink's business is a very low carbon emission, very environmental friendly business, because our business don't generate much of waste. The only waste is actually certain fiber cable that cannot be used. And we have very small, you compare to any other organization, our scope 1, scope 2 emission is very, very small. Okay. And then another point I want to highlight is on the governance side. We actually receive quite a number of good awards and recognition for our governance and communication. And the last one that we received probably 1 or 2 weeks back is actually also on a sustainability distinction award. So with that, I think I will end my presentation here and I leave some time for the question and answers from the audience. Thank you.
Thank you, Diane. Thank you, Mr. Tong. It's I've admitted I'm a noob in this space, and it was a privilege to be able to understand the sector, both Malaysia and Singapore today itself. Yeah, fantastic margins for operating margins. And just a quick one to the audience. If you all have any question, you can actually pop it in the chat box here. This is where I say hi, hello. But I will get the ball rolling because I myself is now very impressed with the business model, and if I'm not mistaken, looking at how, just let me digest this. for every user connected to the broadband, you will get $13.50. Am I correct?
Yes,
That
that's
is
correct.
like a stamp duty to me, right?
Yes.
It's fantastic. I mean, yeah. So okay, before I jump into more of my own question, we should give some priority to the chat box like YCJ. Who are your direct competitors, both present and potentially future? Yeah.
Okay, I can address that, Adrian. Thanks. And thanks for the question. So our fiber business for the residential space, there is no direct competitor because today we are the only one laying a fiber to all the homes. No other telcos are laying fiber to all the homes. So that part of the revenue that we derive from residential, serving residential end users, uh, basically all the households, is pretty stable. It's going to be stable and very stable. So as I mentioned just now, it's contributed and continue to contribute about 60% of our total revenue. We do have competitor in other space, say providing fiber in the non-residential space to offices, commercial complexes, warehouses, and all that. Today, we have about 1/3 share of the broadband market because other operators are able to also provide fiber if they have fiber or if they wish to lay fiber to those locations. It has always been the case over the last so many years. It has always been the case. So I would say the direct competitors would be all other telcos that are able to lay fibers to those locations. Yeah, I hope that answered the question.
All right. So jumping to the business model, right? Obviously NetLink dominates, and can I use I mean, this word is not nice to use lah. It's called monopoly, right, on the residential market. So if I were to put things into perspective, does that mean that the growth of the user is a correlation of the population growth of Singapore household?
Yes, yes, I think that is correct. We don't call ourselves a monopoly because officially we are not. I
Yeah.
think it's just the case that we are the only one because it will cost a lot for anyone, any other telco operators, if they decide to lay fibers to all the homes. It is very difficult to do. Why difficult to do? Because you have to have underground pipes to all the homes. That's very expensive to do. And then lay fibers to all the homes. Very expensive. Uh, and actually, it was also the reason why in 2008, the Singapore government and regulator decided to intervene in the market, that they must appoint someone to do all of this. Otherwise, you know,
It will
the
never
existing
happen.
players will pick and choose, right? Will pick and choose
Mm.
where they want to serve and where they don't want to serve. So it will be very challenging. So I would say our residential space, we are quite secure. I won't say monopoly, quite secure. Then your question about growth, obviously today we have reached almost everyone that needs this. So where is the growth going to come from? The growth is going to come from new household formation. If you look into Singapore history, the last 10 years, on average, we add about 25,000 homes, private as well as public homes, every year. 25,000, not every year it will be exactly 25,000, some year a bit less, some year a bit more, but roughly, let's say 25,000. So we do expect that the connection number will increase by the kind of ballpark, right? The kind of number every year going forward. So the population, the new number of new households will continue to grow. So which means our residential connection will continue to grow. It's just that if you look at 25,000 versus 1.5 million, then the growth rate is actually quite low. I have to admit that it is low. There is not much we can do about it. So it will be low. And that is the reason why we are also looking into how do we grow other type of connection, especially the outdoor connections. We like to see more outdoor connections, and we believe that there will be strong take-up in the outdoor space. You would most likely you will know that Singapore has announced a Smart Nation vision in 2014 or thereabout. But over the last 10 years, I must say I'm also somewhat disappointed. There's not that much connection outdoor. We only have a few thousand connections. We hope that will change. I think there are a lot of factors affecting the rate of adoption of outdoor connection to sensor and all that. I think one is the cost of sensor, the maturity of the technology, the application.
It's more IoT of things for outdoor, right?
There is. You could install sensors even to control street lights, but there's a huge debate even as we speak, right, about the usefulness, the utility of all this deployment. But my own view is that there will be more and wider adoption because prices of some of these devices will come down, and the various agency will find a new and better application that will be useful, for them and for also the consumer at large. So we do expect more connection outdoor going forward. That's something we are working towards. Perhaps I'll pause here and take the next question then.
Okay, so the next question is, looking at how, by the way, Wendy, I saw you typing, but there's no more typing, my friend. You can just speak out. If you raise your hand, I'll unmute you, Wendy. But just to narrate further back into the growth, right? The revision of rate, I noticed, is on a downward. So
Yes.
every year you will expect a bit of a downward shift, but not too much, I hope.
No, actually, it's reviewed every 5 years and sometimes longer than 5 years. The agreed pricing will stay at least for 5 years. When I say longer than 5, because sometimes they take longer to set the new price. So then it will stay longer. So that's what happened during the first period. The first pricing was set for 5 years from 2018 onwards. So it's supposed to end 2018, right? Supposed to end at the end of 2022. End of 2022. So 2023 onwards, we should have new pricing. But we did not. So the same price stay for longer until 31st March this year. And then we have a revision of the price downwards. You're right, downwards. Why downwards? We used to charge a residential end user $13.80 per month for the use of the fiber. We don't charge them directly. We charge it through the telco. So the telcos that offer a broadband package to, let's say, Diane House, Diane will pay for $40 a month, let's say, to a telco. The telco will pay us $13.80 in the past. But from 1st April this year, they will pay $13.50. So there is a reduction of 30 cents.
Yeah.
But why is there a reduction? The main reason for the reduction is that we just have more users. So 5-6 years ago, when they work out this formula, we have about 1.1 million users. Today, we have 1.5 million users. So more people are paying for it. So the cost is allocated and spread out based on the user. They also take into account the investment we have made over the years. So if we have made more investment, they will have to make sure that we recover from through the rates.
Yeah.
But this is balanced off by the increase in the number of users. So they will set a new price. And the thing is, once this price is set, and yes, it is effective from 1st April this year, it will be the same price for at least the next 5 years. Right? So there'll be no change.
I kind of get you. It's more like a balancing act of the balance factor back to the similar revenue equation. In a very layman context, when your users increase, when your capex is spent as the user increase, when they review, they could take into consideration that the scale is there. Probably we can reduce some, but I also just a cheeky question. Does the broadband players in their bill separate that line out, or they include it in one bill?
Oh, they include in one bill. There's no separation of that number. In fact, to most users,
so it's
in
like
Singapore,
$40 straight dot $40.
Yes.
So
because
they're not like RA Asia when we take the flight, they say this is my passenger service charge $65 from KLIA 2, right?
Because actually it doesn't matter to us.
Yeah.
The rate is already fixed. And I think I want to address one part that I think you were asking a question around. Is our total revenue fixed? Because I mentioned that we will charge less when we have more user.
Yeah.
That is it a balancing kind of formula whereby you have more user, you charge less, and therefore at the end of the day you end up the same revenue? Actually, the answer is no. The
Okay.
answer is actually our revenue increased. So if you look at our revenue over the last 7 years, it has always increased. And it should continue to increase. Maybe this year, because the price is compared to last year, the price is lower. We used to charge 1380, and then this year we adjust down to 1350. So the revenue will be affected somewhat unless the connection number catch up very quickly. And the connection number will catch up, but it will not be catching up over 3 months, right? It will take at least more than a year.
Yep.
But the thing is this, how our revenue increase is based on the amount of capex. I have not explained this because it may take a bit of time to explain. Actually, we are focused more on the total investment because the way we are regulated is this. Actually, the regulator main concern is what is our total investment. And if our total investment is $100, I use a simple number, $100, the regulator will decide on the rate of return. And the regulator rate of return decided for this period is 7% pre-tax rate. What it means is that if I invest $100 and this 7%, applying this 7%, I should get $8 per year for 30 years, roughly. It's a simple way of looking at it. So if I add another $100 investment, then they will need to give me $16 per year for 30 years. So the way our model works is that the more investment we make in the network, the more revenue we will get. So why is this formula set in this fashion? Is because the regulator would like NetLink to make sure that we make appropriate investment, to make sure that we continue to grow the network, we continue to meet all the needs of all users. So they need to have a formula that will allow us to continue to invest. Because when we invest, we need a return. So we have to continue to invest. Obviously, we cannot just invest and gold plate our network, So they will check on this investment, right? If the investment is properly incurred, efficiently incurred in the regulatory parlance, then it's okay. We will get a return on it. So, for example, over the last 7 years or so since our IPO, we invested about an additional about 800 million actually. So we will continue to invest. If you look at our capex last year, last financial year is more than 100 million. So we continue to invest in the network because all the investment will be taken into account. That will be taken into account when they look at the every 5 years when they review the prices. All the total investment will be taken into account to determine what total revenue we should earn. And then once they determine the total revenue we should earn, they will use that to determine the prices they should charge all the end users so that we can get the revenue. Yeah.
Okay.
So prices 1350 that we charge the end user is a derived number.
Yeah. Okay.
Yeah.
That's fantastic, actually. I mean, so coming down that wait, what's a correlation from YCJ? What's a correlation between interest rate and DPU?
Okay, I'll do that. Actually, if you're talking about interest rate on the loan and DPU, there's no correlation directly.
Yeah.
Okay, there's some impact. Of course, if interest rate is very high, you could say it affect our cash flows, but actually our cash flow is very strong. And today, the interest expense is only a very small part. Diane explained it's probably around 20 million a year. We generate close to 300 million EBITDA, so pay $20 million a year, not much. And we pay distribution 204 million a year last year.
I can feel the force of the speed of the fiber in cash flow,
So not directly, but however, if you are looking at DPU yield versus, let's say, 10-year Singapore government bond, the investors treat us like a yield instrument, a yield investment. So if the Singapore government 10-year government bond is around 3%, so far, of course, none of this is fixed, right? It depends on investor sentiment and the yield premium, risk premium they apply to our stock. So far, we have always been trading, the stock has always been trading at around 3% premium to the Singapore government 10-year bond. Plus minus, sometime a bit tighter, 2 point something, sometime a bit wider, 3 point something percent premium over the Singapore 10-year government bond. As of now, today, we are trading at about 6% yield, right? The Singapore government bond, 10-year bond, I can't remember the number, probably around the 3% mark, right? So the differential is about the 3% mark. Although I would argue that 3% risk premium is too high. We are very low risk.
Yeah,
But
yeah,
still,
definitely, because
it's up to investors to decide that.
because Ewing, if I'm interrupt, the difference that I love you more than the top 5 IH leader, IH S-REIT leaders, right, is that I don't need to fork out money again after taking the distribution from you guys. That is a major difference because that will be a net yield to me. Like,
Yes,
yeah,
you could look at it that way.
it's
I
like
think
eating
so
kan
far
lao
we
mian lah. It's like, it's straight to me lah. Yeah. And just a bit more that, can you remind us the lowest treasury yield of Singapore before the rate hike happened from US? The lowest interest rate environment in Singapore.
I can't remember. You see, we have always been trading at about 5 to 6% range. So the lowest probably 10-year government bond maybe 2 point something percent, probably 2 point something percent. And then our stock is trading at about 3% premium to that.
Okay, so
Yeah.
do you mind if I share my screen?
Sure.
Because I wanted to show the crowd something. Hold on, yeah. I mean, I wish I've hosted you guys a lot earlier, now. So why did I ask the question is because I was trying to find a bit of a pointer on where would obviously, if we look at this November 2021 up to 2023, we are hit by a lot of factors. Then the interest rate hike came in. Hence, the share price has been actually at a very low end of low 80s. And if I were to read the chart technically right, the next level, if it breaches of 91 cents, we are headed to the $1 zone. So that could be driven by the expectation of interest rate cuts, even from the Singapore in, or it could be driven by the sentiment when US is starting to cut. So that's why I'm trying to drive the idea towards that context. But as it is, it's looking quite good.
Yes. So you're right. I think generally, of course, we cannot, as management, we cannot predict where the share price is going. We can only say that based on historical, we have always been trading at about 3% plus minus a little risk premium over the Singapore 10-year government bond. And I think everyone now expect that US will carry out some rate cuts from from end of the year onwards. So I think that is favorable to all U stock, not just our U stock. I think that is favorable to the U stock. I think what is interesting for us is that we not only benefit from a lower interest rate environment in the sense that the share price will go up if the yield comes down, but also because of our refinancing that my CFO talked about. It so happened that we have a major we will do some refinancing in 2025, end of 2025, but the bulk of it, the larger amount, is only going to be done in 2026. So we think the timing will be even better for us compared to some others. If other companies need to do a refinancing anytime this year, they do benefit from the expectation that interest rate is going down, but they may not benefit as much. We hope to benefit even more.
Not adjusted yet.
Yes.
And what's the current run rate?
You see, today the SORA is about 3% still. I think just over 3% SORA, right? So So we have very good margin, but still, if we were to borrow, the effective interest rate will be more than 3%.
Yeah.
But today we are achieving 2.69 because of the
Fantastic.
hedge that we have done several years ago, actually.
Fantastic.
So we
I
are
mean,
very lucky that we have done a very good hedge.
very fantastic management in that context. I mean, it's just way below the hikes lah. And one thing, this is the part I'm a bit curious more, is like, because you guys are a business trust, is there a throttle on how much you can gear as compared to a REIT? There's no throttle, right? You can gear
No.
up to 100%, right?
No. But I would say we have a fairly conservative view when it comes to balance sheet management also.
Yeah,
We do not have a gearing limit like the REITs.
yeah.
But what we like to do is, because of the way the stock is positioned in the market, it's attractive to a lot of investors because investors like the very low risk profile of this stock.
Yep.
And because they're attracted to a good stable yield, very low risk profile. So we do not want to change the risk profile too much, if I may put it that way. So therefore, we are not aiming for very high gearing level.
Okay.
We want to manage our balance sheet conservatively. We are always able to refinance, and we are always able to refinance at the most attractive rate possible because our balance sheet is very strong.
Yeah.
So I think that's what we want to maintain.
But I'm looking to gear up. If the low interest rate were to happen, I mean, it's just an idea.
Yes.
What instruments can do or how people can deploy their gearing capabilities. So I think I don't have much question, because I think you guys are a fantastic company, well run, very pleasant, charming people. I mean, it's funny lah. We are Malaysian and Singaporean, and we always have our very friendly rivalries, right? So yeah. Let's check if there's any more questions from the floor, guys.
There's a question about NetLink. Any plan to expand outside Singapore in the Q&A?
Okay. I
Okay.
didn't pop up. That's a good one. So is there
Okay.
any plans on that?
Okay, I think then I'll take it lah. I think since I answered this question a lot from different investors. We just did a non-deal roadshow, actually, by the way, with some is the investor last I think last week.
Locally or foreign?
Locally
in
as well as
Singapore?
foreign. Locally as well as foreign, including Malaysia as well. Actually, we didn't go to Malaysia. We did a Zoom call with a Malaysian institution.
Yeah.
But okay, back to this question. I would say yes and no. We want to look at overseas investments, but we want to look at only digital infrastructure, which is fiber, towers, or other type of digital infrastructure. But why I say yes and no? Yes, because we are looking at it. No, because I think I don't want to raise expectation too much. We are not actively looking to buy something. We are going to be very cautious. You may ask me what is the reason for that. We certainly have the balance sheet ability to raise more money. We have the strong cash flow, we could invest. But we are cautious because the market, there's quite a bit of hype on digital infrastructure. There's also a lot of competition from different funds, infrastructure funds, pension funds, and also strategics in this kind of digital infrastructure assets. So infrastructure asset has been transacted at very high valuation. I give you one example. Say, for example, telecom towers I'm referring to, right, in Australia, New Zealand, have been transacted at 30 times or more EV EBITDA, which is a very, very high number to me. Yeah.
Wow.
So I think there's just too much competition now. And there are so many funds, they have raised a lot of money. They are focusing on this space. There are specialist funds, digital infrastructure funds. There are general funds, general infrastructure funds. and so on. So there are too many players in the market trying to look for these deals. And they may have their own views, but we as a corporate, as an operator, we just have to be more cautious on how we deploy our excess funds.
Yeah, 30 times every EBITDA is just. I would be happy if I'm selling it. I mean, I'd be laughing to the bank. It's just crazy. Today I had a discussion with a friend on a hospital sale that was transacted at 25 times PE, and even so, or every EBITDA, I forgot 25 times PE. Yeah, even so, I think it's pricey really. And this 30 times every EBITDA is just wow,
Crazy.
amazing.
Yeah.
Yeah.
I don't know lah. You know, some of these people may make it work, but we will find it too expensive. So
Yeah.
I think in general the outlook for overseas investment to me, I think is something that not as interesting as we like at this point in time. It may change, right?
As there are attractive deals that come up, not to pursue it like desperately in paying off for unreasonable at unreasonable valuations. I like you guys ready, man.
No, because I think we are going to be very cautious.
Yes.
The other thing is
Well run.
also, you know, Singapore currency has been very strong. We already win by not doing any investment. You know, a lot of companies that have invested overseas, even if the business perform, they lose because of the currency, because Singapore currency has been very strong. So we have also had to be very careful about investing overseas when Singapore currency continue to be strong over the last 20 years, and I hope it will continue to be strong as well, since we are Singapore-based company.
Fingers crossed.
So we have to calibrate our appetite Don't just go for anything that's available We want to be very careful, and to be honest, we spend quite a bit of time and even a bit of money to look at projects overseas. We have done that, but we haven't found anything that we like at the right price.
That's very good.
And we don't want to rush. There's no reason to rush into something. You know, we can get ourselves into a lot of trouble.
Yep. Okay, that's very insightful from you guys, Yu-Hing and also Diane. And so far, I think there's no more question, and we are at 9 p.m. already. So if there's no more question, probably we shall let you guys rest also. And if there are any more questions, actually, you can direct to my email. And I can actually check out with Yu-Hing and also Diane and their IR team. And I must thank the team again, Sarah and Annabelle, Victor, Yu-Hing, and also Diane for spending this their valuable time with us, their valuable evening. And yeah, I really hope to see more. And I totally changed my mind about Singapore listed companies. Yep. Yeah. So yep.
Okay.
Without further ado, good night, guys, and yeah, have a good rest. I shall see you guys very soon. And Yu-Hing, Diane, do drop by Malaysia. Currency is still strong. I will host you guys.
Okay, thank you very much, Adrian.
Thank you. Have a good evening,
every one
everyone.
of you. Yeah, thank you, everyone.
Good night. Bye.
Good night. Thank you.